Prices are rising fast. Gas, rent, and food cost more than ever. Paychecks aren't stretching far, and for many, saving money feels impossible. But something doesn't add up. The stock market is booming. Big corporations are making record profits, yet millions are struggling to get by. Is this just a rough patch? Or is something much bigger at play? History has shown that when things seem unstable, a crash may be around the corner. Could we be standing on the edge of an economic collapse? Or is there still time to fix it? Stay with us. This could change everything. The cost of living crisis. Across the country, people are paying more and getting less. Rent has surged by over 30% in some cities, forcing families to downsize or move. Grocery prices have climbed so high that basics like eggs and milk feel like luxury items. Healthcare? A single hospital visit can wipe out months of savings. Meanwhile, wages have barely budged, leaving millions struggling to keep up. Take Sarah, a single mother in Texas. Last year, she could afford rent and groceries without worry. Now she works overtime just to cover the basics. She's not alone. Millions are facing the same reality. This isn't the first time America has faced economic hardship. The 2008 financial crash wiped out homes, jobs, and savings. But today's crisis is different. Prices keep rising, but there's no crash yet. Is this a warning sign of something bigger? Or is the system breaking in ways we've never seen before? What's causing this crisis? Prices aren't just rising by chance. There are powerful forces behind this crisis. The government printed trillions of dollars in recent years, flooding the economy with cash. More money chasing the same goods means higher prices. To slow this down, the Federal Reserve is raising interest rates, making mortgages, loans, and credit cards more expensive. Global events have also made things worse. Supply chains are still struggling from COVID-19 shutdowns, while wars and trade restrictions have disrupted food and energy supplies. These shortages push costs even higher. Meanwhile, major corporations are raking in record profits. Some have quietly reduced product sizes while keeping prices the same, shrinkflation at its worst. Housing is another disaster. Home prices have soared due to low supply, and rising mortgage rates are shutting buyers out. Renters aren't safe either. Demand has driven rents to record highs. All of this raises a critical question. How long can this continue before something breaks? Warning signs of a major economic collapse. There's a growing gap between Wall Street and Main Street. While the stock market reaches new highs, everyday Americans struggle with rising costs. A booming market often creates a false sense of security until reality catches up. Debt is at dangerous levels. The national debt has soared past $34 trillion. Corporations are drowning in borrowed money, and personal credit card debt has hit all-time highs. When debt outpaces income, the economy weakens and defaults rise. Banks are showing cracks. As interest rates climb, lending slows, businesses struggle, and home buyers get priced out. The 2008 crisis started with failing banks. If financial institutions begin collapsing, it could trigger another meltdown. History offers a warning. The 1929 crash, the 2008 recession, both came after reckless spending, unchecked speculation, and ignored warning signs. The same patterns are appearing today. The question is no longer if a collapse is coming, but how soon it will hit. What happens if the bubble bursts? If the system breaks, the effects could be devastating. A recession would mean businesses shutting down, mass layoffs, and a sharp drop in consumer spending. Families already struggling to afford basics could be pushed into poverty. Another dangerous scenario is stagflation, where prices stay high, but the economy slows. Wages wouldn't rise, yet rent, food, and gas would remain unaffordable. The middle class would shrink as more people struggle to make ends meet. A worst-case scenario is a financial collapse. Banks failing, the stock market crashing, and retirement savings wiped out overnight. Housing prices could plummet, leaving homeowners stuck with massive debt while renters face soaring costs. The warning signs are clear. The economy is walking a tightrope, and if the wrong move is made, millions could be left scrambling. The big question is, how much time is left before everything starts to crack? What can you do to prepare? With uncertainty growing, taking the right steps now can make a huge difference. The first priority is building financial security. An emergency fund covering at least 6 months of expenses can provide a safety net if jobs disappear or bills pile up. Multiple income streams reduce risk. Relying on one paycheck is dangerous. Side businesses, freelancing, or investments can provide extra stability. Smart investing is critical. Inflation weakens cash savings, so assets like gold, real estate, and recession-proof stocks can help protect wealth. Avoid risky, high-debt investments that could collapse in a downturn. Staying informed is essential. Economic policies, market trends, and interest rates change fast. Those who pay attention can adjust before it's too late. Economic downturns don't impact everyone equally. Those who plan ahead stand a better chance of weathering the storm, while others struggle to catch up. The choice is simple. Wait for the worst or prepare now. Warning signs are clear. Rising debt, inflation, and a widening gap between the stock market and reality. History has shown that bubbles don't last forever. Are we on the verge of another collapse? What do you think? Share your thoughts in the comments. Like, subscribe, and stay informed.